The month of March rings in the season of LRS or Liberalized Remittance Scheme, with India's high net worth individuals looking to send money overseas to invest in real estate. Some buy property abroad for a better lifestyle and some actually seek out citizenship through property investments. According to Henley and Partners, in 2020, despite COVID restricting global travel, wealthy Indians again topped the list of those making inquiries for residence or citizenship by investment programs. Today on the Property Show, we dig deeper into what prompts the well-off Indians to buy property abroad and which are the cities and countries which are the most sought out for either for lifestyle or for citizenship. Welcome everyone, I'm Anisha Natarajan. Joining me today are Pallavi Joshi Bakhru, partner at Grant Thornton LLP, Surabhi Marwah, partner Ernst Young India, and Akash Puri, director international at India Sotheby's International Realty. Thank you very much for joining me. Pallavi, my first question is to you. Has there been a steady increase in Indians buying real estate abroad, as has been widely reported over the last 5 to 6 years?
Oh, definitely, Manisha. There's been a distinct increase, and it's driven by different reasons. One is businesses have become more global. So, people, wherever they set their roots as far as business is concerned, they also like to buy property. And I think that's a very Indian way of finding your feet in any new sort of jurisdiction. Mm-hmm. What we now increasingly find is a lot of people are buying property where their kids go for education. And a lot of people are buying holiday homes now. So, clearly there is a huge uptake on Indians being interested in buying property abroad.
Mm-hmm. Akash, you've been dealing with Indians and advising them on investing in some of the big global gateway cities of the world. According to you, what are the primary motives? I mean, is it lifestyle? Is it citizenship? Is kids' education? And sometimes people say it even makes great investment. I mean, today Dubai might be cheaper than Mumbai.
That's correct, Manisha. Actually, all the reasons that you've mentioned and a bit more. As a prudent financial or asset manager, it is no longer an aspect of, it would be nice to have a home overseas, but it is now actually a very prudent decision to actually have a asset which is overseas. And this basically helps in many ways because firstly, as Indians, we like to have a lot of our portfolio into real estate and gold. And if we can geographically de-risk the real estate portfolio by buying in a blue chip city like London and New York, there's nothing like it. Along with that, there is some sort of capital appreciation in terms of the property value. There's a good rental yield between 2 to 3% on a yearly basis if you're buying somewhere in central. And of course, there is the play on the currency and the pound and dollar usually get stronger every year. And that basically adds the extra kicker to the investment in the real estate overseas.
Surabhi, what's your own opinion? I mean, is it lifestyle, is it investments, or is it business and children's education? What are some of the top, what according to you is the top reason?
I think Pallavi and Akash have covered most of them, but I think I'll just add one more point, that's access to key markets. So sometimes, if you're based in one market, for example, EU, buying a property and therefore linking it maybe with an investment, citizenship or a visa gives you access to that market, and that could be for education, that could be for businesses. It's just easier to set up corporate structures as well. And also, diversify your assets. So Akash talked about the Indians being, generally more favorable, sort of partial to real estate. So that is another very key indicator as well. So that's the only one additional bit from what Pallavi and Akash said.
So real estate continues to remain pretty high in the asset classes they want to own. Pallavi, there's a big hue and cry about millionaire Indians leaving the country and wanting to, take permanent residencies abroad and globally. Is that something which is overspoken about? Are they just doing it because it makes more sense for their businesses?
So this is an interesting question you ask because, one of the things we've noticed is while a lot of people want to become non-residents, they want to take permanent residency visas. They don't necessarily want to give up their citizenship of India. And I think it's being driven by multiple reasons. India has this concept of taxing your worldwide income. A lot of people who have global income are quite happy being a non-resident. Then of course there are business reasons, there are personal reasons. A lot of people want to live in an environment which is sort of better to breathe in not just live in, but they're very basic issues. I know people whose kids have had asthma problems in India and they've chosen to sort of relocate abroad.
Wow.
Better education, better healthcare facilities. So I think there are a lot of drivers for people to look at, being non-resident Indians. People still haven't sort of lost sight of the fact that India is still a great country to do business. So, while their anchor will be the business in India, but a lot of them will choose and are choosing to become non-residents and over a period of time take permanent residency and then, explore citizenship 5 to 7 years down the road. So that
Akash,
is a trend that we are seeing, yeah.
All right. Akash, how difficult is it to actually get either permanent residency or citizenship through investments in real estate?
Actually, Manisha, over the years, it's become much simpler. And we, as being part of Sotheby International Realty, assist our clients to get this opportunity through real estate. We're present in 75 countries. We've got 1,000 offices and close to about 24,000, associates. And through real estate, it depends on how much time you want to spend in which country to get it, or it depends on your time horizon if you want to convert that into a passport, or the amount of investment you want to make. It's fairly simple. For example, Lisbon is a hotspot. And over the last, in the last 1 year, the real estate market in Lisbon has actually, the prices have moved up by 6%.
Surabhi, other top destinations, I know that Lisbon, of course, has caught everyone's fancy in the last few years. But things like New York and London are pretty high up in the list of wealthy Indians to have a property in these kind of destinations.
So Manisha, let me break this up into two. So hot destinations simply for buying property, let's not link it to citizenship by investment, would be Portugal, Spain, US, UK and Canada. They remain hot destinations for Indians. Got a lot of clients who want to go there. That's not necessarily linked with citizenship by investment. US, UK, etc. may not be. Then you have the hot categories of citizenship by investment, which is you buy a residential asset and you get a PR and then a passport there. And those hot ones are Caribbean countries, and there you could invest about $350,000 to $500,000 and get a citizenship in time. Turkey and Montenegro are very, very hot at the moment. Again, the investment amounts are slightly lower, $250,000 as well. I've got a lot of clients asking me about Austria and also, about Malta. But those two, whilst they're still hot destinations, they're not traditionally or typically citizenship by investment.
Would you agree with Akash that this entire route of citizenship through investments or residency through investment has over time become easier? Because I keep reading contrary reviews. For example, US raised the amount that you have to invest for citizenship through investment program, and you had some murmurs happening even in Europe in terms of they're going to probably stop the golden visa route. So what's going on?
So US, yes, they increased the limit, and the wait time for Indians has increased considerably. That's one outlier, and that so let's keep US out for a moment. Europe, yes, it's simpler, and a lot of people are doing it because for HNIs, the amount that you need to invest is not a very huge amount at the moment in terms of of course an HNI's pocket. We are talking about the wealthy or HNIs. Processing timings have been made easier. You have a lot of companies and lawyers and others who are actively working along with real estate companies, along with tax consultants such as us, to make it easier and bind it all together. Some of these popular European programs also don't need you to stay there. So, for example, in Portugal, you don't need to shift lock, stock and barrel. You can stay in India, just spend a couple of days in Portugal. There are concessional regimes for taxation of rent, etc. So all of that bound together has made it a little easier. And then also we have this, sort of a cult, personality, and so therefore the more people hear about their peers and friends and other promoters and HNIs doing it, the more they are, they start thinking about it, talking about it, and then realizing that it's something that is very, very doable. So that's really what's happening.
Akash, you spoke about, so that's citizenship and residency, Akash, but what about just lifestyle and investment? I mean, if I was not looking at citizenship or residency, I had the money, which would be your top picks in terms of best destinations? You spoke about Lisbon, but other than that, for a lifestyle upgrade and even returns?
Sure. So that's a very good question, and keeping that aside, the citizenship angle aside, New York and London have always been top of the charts. There has been a huge amount of activity in London after the announcement of the stamp duty holiday for up to about £500,000. There is some sort of a benefit that people are getting, and that has been extended now till June of 31st. So a lot of people look at London. In fact, just last month, the average price in the UK has gone up by almost 1% for real estate after the extension of the stamp duty holiday. And for the first time in London, in London, the average price of an apartment has touched £500,000. So that just goes to show there's so much demand for London. When one talks about New York, which is another very popular destination, and everybody knows the most amount of millionaires per square foot live in New York. So that's really, the big daddy destination when it comes to the real estate investment.
Pallavi, big question to you. What happens now? I mean, this is the kind of excitement we saw continuing in 2020 when Indians couldn't travel abroad, right? Now, of course, with the vaccination, you will have people beginning to travel again. Do you see 2021 probably to be the year when this will accelerate?
Definitely will, and I think there'll be multiple reasons driving that. One, of course, will be, and I'm sure Sotheby's will ratify that. Property prices have become very lucrative, very, very attractive, especially in Europe. I mean, there are some schemes where you can come and buy for literally, 100 euros. You can buy a house, which you can then, of course, you need to renovate and look after and all of that. Two, I think people have also realized that for a lot of us, we can work from anywhere. And I think that's going to be another driver. And, I'm very tempted to quote a line here where I think Mr. Uday Kotak mentioned somewhere. He said, geography has become history. And we already seen
yes, it's
that.
a good one.
A lot of people in India are actually sitting out of Goa and working.
Yeah. So,
really, Manisha, it's a question of money. I mean, why can't you be sitting in the Italian Riviera and working if you could afford it? So
absolutely. I
definitely going to happen, as I said, for multiple reasons. It makes investment sense. From a lifestyle perspective, it makes a lot of sense. And if I can just add to what Surabhi and I had mentioned earlier, Europe, if you take buy a property in Lisbon, for example, you also get access to all of EU if you have a PR visa.
If you've got the money, then the world is your playfield, not India. Pallavi, Surabhi and Akash, thank you very much for joining me. Extremely interesting discussion. It's not only the wealthy Indians who have been active all through the pandemic in upgrading their lifestyle or looking for better destinations to call their home. The Luxury Outlook 2021 report by Sotheby's International Realty points to a thriving luxury market globally. When we come back, we catch up with Tammy Fahmi, Vice President Global Operations for Sotheby's International Realty, to find out which are the most sought after property destinations for the global wealthy, so you can profit from those big trends. $150 billion in sales, 32% growth in revenues. These are the headline numbers that the world's most iconic luxury real estate brand Sotheby's International Realty clocked in 2020. Despite the crisis, the luxury market is very much alive and thriving, says Philip White, President and CEO of the company, in this report. We have with us Tammy Fahmi, Vice President Global Operations for Sotheby's International Realty, to take us through some of the key findings of the Luxury Outlook Report 2021. Tammy, my first question is, can you identify top 3 surprises from how luxury realty shaped up in 2020?
Thank you, Manisha. It's a pleasure to be here with you today. Manisha, we launched this Luxury Outlook Report in February, where we took an in-depth look at high-end residential markets across the globe to really reflect on this unprecedented year for real estate and global wealth. So we did see some trends, 3 trends to be specific. The first one was, bigger is better. People wanted space and bigger properties that could be quarantine friendly. Second, we saw that people definitely wanted more amenities. So things that we didn't have access to during lockdowns, such as pools or Zoom rooms, home offices, gourmet kitchens, because people were certainly cooking more at home, gyms, and definitely outdoor space for recreational activities. And then the third trend we saw was about sustainability and wellness. So a renewed focus on eco-consciousness and incorporating healthy lifestyles into their living situations.
What are some of the top trends spotted in this Outlook report which will influence the global luxury market in 2021?
Well, that's a great question. While no one has a crystal ball for the future, based on our findings in the Luxury Outlook report, we saw two key things that we expect to continue in the near future. One is the seasonal markets turning into year-round destinations. Definitely remote working has opened things up. People are no longer tied to physical office locations. And buyers are driving million-dollar home sales into secondary and tertiary cities. They're setting price records all over the world in these cities. And the second trend I think we're going to see is that millennials will likely have a large impact on the market. In our Luxury Outlook report, we worked with Bain & Company, who identified that millennials could account for potentially up to 45% of the luxury goods sales by 2025. So at about 72 million millennials, they're the largest adult generation, and they've got fairly unique customer preferences. They're laser focused on lifestyle. They want homes that are in close proximity to on-trend fitness studios, restaurants, and shopping. And they're very eco-conscious, and that's driving trends for developers to work with more sustainable materials.
Tammy, are there any destinations, cities that have emerged as a preferred choice for the rich in 2020 and probably could be favorites continuing in 2021?
Yeah, we, in the luxury report, we outlined what we refer to as luxury hubs on the rise. So through our research, we found that waterfront properties and other scenic areas have more appeal than ever. And we found 3 regions that have become destinations for prime real estate and are seeing more buyers than ever. So the first one is Auckland, New Zealand. They've seen one of the most dramatic increases in luxury home prices of any city in the world. They had quite an admirable response to the COVID-19 virus, which made it even more appealing. And buyers seem to be attracted to the major new developments that are happening in Auckland. So that's the first city we identified. The second one is Singapore, which remains a desirable destination for Asian buyers and beyond. It's known as a safe haven. It was named Asia Pacific's top market. And even with global restrictions, foreigners were playing a very key role in sales. And then the third destination we identified takes us back to the United States. In California, 2 areas, Marin County and Santa Clara, where we saw those towns benefit from wealthy investors from San Francisco and Silicon Valley. Among the priciest towns is a town called Belvedere, which is on an island in the San Francisco Bay. So those are the 3 kind of key prime markets that we're seeing.
What about the trend of migration from big cities to smaller cities or more scenic locations? For example, at one time, New York saw a pretty heavy COVID pandemic effect, and we heard stories about people fleeing from the cities. Do you believe in 2021 we'll see a return of people to big cities?
That's such an interesting question, Manish, and we've heard that question a lot. I know there seem to be a lot of stories about people fleeing the city, but really what we found is that they were, while they were potentially leaving the city temporarily, they were not selling their primary residence in the city. They were looking for second home locations. And so, we think that, yes, there's definitely going to be a return to their primary residences, and people will have this balance of city life as well as second homes in these either more scenic or smaller areas.
Tammy Fahmi, thank you very much for joining us and giving us the key trends and noteworthy points for us to take away. A, millennials are entering the real estate market at a rapid pace. B, sustainability is a big theme for luxury buyers and will continue to be in 2021. And this year will also see strong demand for luxury homes across the globe. That's it from me. Thanks so much for watching.